Hello, today is Friday, January 15th, 2016, and right now stocks are down about 400 on the Dow, so it's shaping up to be a pretty bad day, and of course they're blaming something. They're blaming oil again today, which dropped below 30 per barrel on the U.S. contract. Anyway, I want to take a look at a few things. This is the USO ETF, the oil ETF. It doesn't exactly track the crude contract due to the way it's constructed, but it's close enough for now. And you can see the big drop off starting in 2014. Here's 2015. We have here is a daily chart. This is the 200-day moving average. So clearly this is a bear market. There's no arguing with that. So I want to look at a few indicators. This is RSI here. And you can see that it doesn't really give us a whole lot of information. It's no divergence. It's not too oversold. So it's telling us the short-term trend is definitely down with no reason to doubt it. Same with MACD. It's negative. Yeah, it's got a rising slope here. We'll see a little bit more about this on the weekly chart, but I don't have very much to say other than it's confirming the trend right now. On balance volume, falling out of bed. Money is just bleeding out of this thing, and you can actually make an argument that this is panic in oil, and the sentiment is extreme to the bearish side, which could actually be positive. But I'm not going there yet. I don't have that actual indicator. And the bottom is the relative to the S&P 500. Not really relevant here. We'll see it when we talk about oil stocks later. So why do I have these indicators? Well, I have a moving average for trend, RSI for momentum. MACD is also momentum, but it's based on moving averages and spreads between averages, so it's a little different. On balance volume, of course, based on volume. So a grouping of indicators, not just indicators that all say the same thing. Let's take a look at this in the weekly format. And the average is now 200-week average, which I don't really find any value in. So do we see anything here that might give us hope in oil? And there is one thing. I'm going to draw a little bit here. You can make an argument that this is a falling wedge, which would be a terminal type of pattern, meaning the end of the road for this trend. And you can also make an argument that RSI here is rising, and there's the MACD rising again, but I like RSI better for this. Unbalanced volume I don't find relevant in the weekly format the way it's constructed. So there is hope that it's near an end here in the weekly format. That is certainly not a short-term buy signal by any means. All right, we're going to put this back daily. We'll look at XLE, the oil stock ETF. Not a whole lot of surprise here. New low, broke down below this support recently, so that's not a good thing. Pretty bearish. Same thing, RSI, it's weak but not oversold, no divergences. MACD, same thing, heading lower. Arguably a little bit oversold here, but not terrible, so I wouldn't make a decision on that. On balance volume still falling, so it's weak, and relative to the S&P 500, no change at all versus the market. You'd like to see maybe this thing flatten out and possibly head a little higher, even though everything's falling, to let us know that the pressures are coming off oil in terms of got to get out of this thing. When there's there might be other things to sell, but that's not the case right now. And we'll put this into weekly format for the last chart. Again, forget the average there. What I want to show here is where oil stocks have come and gone. There's the bottom in 09, 08, 09, peak in 14. This line here is a Fibonacci retracement of that whole rally. 78.6 is kind of your point of no return, the event horizon, if you will. Usually if it doesn't hold there, it's going to go all the way down to a full 100% retracement. Obviously I can't make any call on what's going to happen in the future there, just as a support level that I'll be looking at. RSI, week in weekly format. MACD, same thing. On balance volume, again, I'm not going to look at that in weekly. And price relative to the S&P 500, still falling out of bed. So my conclusion is that while there's an argument that the whole thing is getting near its end, that doesn't help us make a decision now, because if oil is at 30 or oil is at 25, I mean that's kind of similar near the end of this long bear market. But I'm not one of those guys that looks for $20 oil. I think that is a sentiment overload, a little too bearish. So we'll leave it at that. Kind of wait and see right now on oil. Certainly not buying it just yet.